Hello, I'm Jack Pearce, President of Next Level Consultant and a proud member of the Franchise Hub. Today I'm speaking about financial literacy and the critical role it plays in the success of your franchise company or your individual franchise location. For any individual thinking about starting a franchise or just operating a single franchise location, the need to understand basic financial principles and procedures is absolutely essential. Many business owners don't take the time or have the background in financial education, and ultimately this lack of knowledge will quickly lead to failure. Business failures are almost always caused by what we don't do rather than what we do. Records show over 90% of all business failures are attributable to faulty management, or more precisely, to poor financial management. Of all the new businesses formed each year, approximately 80% fail within the first 10 years. While the franchise business model greatly improves your chances for success, less than half the failures, the reasons for failure remain the same. Here are just a few examples of the top financial killers. Failure to plan properly before startup, failure to monitor financial position, failure to manage cash flow, failure to manage growth, or failure to borrow properly. Notice none of these reasons include failure to use the best advertising, failure to hire the right people, or failure of someone outside the business to provide you with that silver bullet for success. Instead, all these reasons deal simply with a failure to plan, monitor, and manage the business. These are all financial activities you must do yourself, and no one can do them for you. To best keep your finger on the pulse of your business, it is important to understand exactly where the business stands on a daily, weekly, and monthly basis in relation to meeting specific goals of your financial plan. In other words, you need to use sound financial principles and practices in order to manage the business and meet its financial objectives. Proven, time-tested financial principles are the foundation on which any successful business is going to be built. Whether it's a Fortune 500 mega corporation or a mom-and-pop small business, they both operate using the same financial principles. You don't necessarily need to be a financial expert to understand and use these principles. You just need to follow your business plan utilizing specific financial data, analysis, and action plans. One of the most important principles on which the success of your financial management depends is the production of timely and accurate information. Many, if not most, new business owners have had little or no previous financial management training or experience. So simply identifying what is the right information can be a real challenge. Accounting and bookkeeping are often seen as necessary evils, something reserved for the CPA or qualified bookkeeper. But in a small business, you are faced with managing this process of computer-based financial management. Not surprising, accuracy becomes a primary concern. And most of us have grown to believe that computers simply don't make mistakes. Therefore, computer-generated information must surely be accurate. Maybe computers don't make errors, but people do. And if data entry is sloppy and not timely, then it simply becomes garbage in, garbage out. Relatively sophisticated computer accounting systems, such as QuickBooks, are capable of generating mountains of financial data. But none of it is useful unless we get the right information at the right time. And as a franchisee or small business owner, the worst person to kid is yourself. You need to be the first person to know when there's a problem, and you need to plan to avoid problems you know are coming, like closely monitoring cash flow when a large payroll tax obligation is approaching. In order to meet this challenge of timely and accurate financial information, I recommend that every small business or franchise operator use a certified bookkeeper to perform weekly and/or monthly reconciliation of your financial data. The extent to which this person provides services will greatly depend upon your own capabilities and previous experience. But even if you are experienced, delegating these routine financial data entry tasks are better left to a reasonably priced bookkeeper than consuming your valuable business management time. In addition, most cases, you should retain a CPA to help close your books and prepare year-end tax returns. When it comes to financial literacy, I've only scratched the surface of the importance to plan, monitor, and manage the financial activity of your business. We haven't even begun talking about the income statement, balance sheet, costs of goods sold, general and administrative expenses, gross profit margins, net income, assets and liability, retained earnings, and a wide variety of financial ratio analysis, key performance indicators, and break-even analysis. All of these terms, formulas, and methods can easily be learned, but a commitment to financial education and literacy is truly a bottom-line requirement. I'm Jack Pearce, President of Next Level Consultant. Thank you for watching.